Roaring Kitty, Robinhood, Reddit, GameStop. All things you'll read about in the Grit Capital newsletter. It's on Substack. It already has more than 23,000 subscribers. In fact, there's 150,000 subscribers across all the social media platforms. It uses meme culture and the marketplace of the internet to offer financial advice to a younger generation who are today's new investors. Genevieve Roch-Decter is the author of this amazing newsletter. She likes cryptocurrencies, Bitcoin, and of course, blockchain is now a growing technology, and Coinbase is now worth more in market cap than the New York Stock Exchange and the NASDAQ combined. And then, of course, there's moonshot investing. So do you have any idea what I'm talking about? If you do, great, stay tuned. You're really going to find this interesting. If you don't, it's probably even more important that you listen to this next conversation. Genevieve Roch-Decter, the brains of Grit Capital, is with me to offer us a look inside a new way of thinking, investing, and making money. Welcome.
Great to be here, Pam.
Okay, so you're 30-something. We won't get into the details unless you want. You are a disruptor, but you're also formally trained, a CFA. You worked on Bay Street, advising, trading, and money managers. So how did you get from there to here?
Well, that's a loaded question. It's been a big journey, but you're right. I did start as a professional money manager, working under my father's umbrella at a family business firm that my father started over 25 years ago, maybe a bit more now. But, I was brought up, from a young age. I won't go all the way back and tell the whole story, but I'm from a home where we talked about investing as sort of a daily occurrence, looking at the world around us. And my father always had this knack for explaining to us in very simple terms, because he wanted to talk to us about this from, the age of 6 or 7 years old, like what, how does the laundromat down the street make money? Like, how does the car dealership make money? Like, these were common conversations that we had. So from a young age, I've always had a little spark in my eye for business and finance because of my father. And after university, I didn't quite know what I wanted to do. And he said, why don't you come work for a summer? And then 10 years went by and I was still there. It's like the summer student that never left.
But you're very also competitive. I mean, I've known Genevieve since literally she was 9 years old. You were playing hockey. Like you've got that, I think you were playing hockey with the boys, weren't you?
I was the Ted Reeves Arena in the beaches. I was the first year they let the girls play on the team, and I had to change in the utility closet because they didn't have a change room for me. And they called me the girl because I was the only girl. And yeah, it like toughened me up. My brother wasn't really into sports, so my father made me, the child that would conquer all of this. I got my competitive spirit and my let's hang with the boys spirit at a very young age as well.
So then there you are, 10 years on Bay Street, working with your father, company's successful. You go off and do this other business, Grit Capital, which you're promoting stocks in the sense of doing investment events. But then this, like you come back to Toronto and you say, I'm going to do this newsletter. You're sitting in your, living room, kitchen, and you just start doing this. How does this work? Who was reading it at the beginning? How have you gotten in 3 months to 23,000 subscribers?
Yeah. Without going into like all of the personal detail, I was a pretty lost place. COVID had hit, so the original version of our business had to be transformed. Right. And my original business partner and I, who are still amazing friends, decided to go separate ways. She went off and started a venture kind of investment marketing firm and started a pet food company. And then I sat around for about, I don't know, must have been like 4 or 5 months trying to figure out what am I going to do? And I tried to venture outside finance. I was actually going to try and do a glamping business operation. But something in the back of my head said, your real passion is finance, it's stocks. And from everything I've read about successful businesses, especially from day one, is you have to be completely obsessed with it. You're not going to succeed. You're not going to make it through those hard moments if you aren't. So it's got to be something that you live and breathe every day. And so I thought, you know what? I've got a lot to say. And I'm in a place where I don't have anyone telling me what to say. I have complete freedom of speech. So why don't I just start writing a newsletter, go back to basics and start talking about these topics that I'm actually investing in? Because I've been investing my own portfolio for the last 15 years. So I just started writing. My first article was in November and it was about Bitcoin. Bitcoin was at 13,000 and it was experiencing, at the time, what I wrote about was there was a resurgence in interest, particularly amongst the the big wealthy money managers. All of a sudden, there was some interest again. It had kind of gone through a bit of a sideways market, kind of downwards market for 18 months. No one really cared. And I just sensed there was something there. So I launched with that issue and just kept writing my little heart out for the past.
Yes, you do. I can vouch. Okay, let's get into that because in the world of finance, I mean, Bitcoin is just one of those things that people, yes, have heard of. They have no idea really what it is or how it works. Invented by some individual or some group we don't even know. What's his name? Satoshi
Nakamoto. Yes.
Okay. Is that even a person?
We don't know. We don't know yet. Not yet. We don't know. It's a fictitious person. We yet to be identified. There's been some rumors as to who it could be, but not confirmed. So it's got that air of mystery, which every great cult and trend usually does.
I know, but why on earth, given that, would you put real money into it to invest when you don't even know where the idea came from?
I think for me, it's a risk asset. Okay. So it sits in my, what I call fun portfolio. So I've always managed my money 80-20. 80% is in your blue chip stocks, your boring, your large caps, your Microsofts, your Disneys.
Predictable.
Yeah, predictable. You make 7 to 8% a year, maybe a little bit more, but we all know that most money managers can't beat the index. So you just put it in those boring things. And then I refocus my attention to the 20%, which is the speculative investments where you can make big home runs, 2, 5, 10, 20 times your money. Obviously, there's going to be a lot of losses too. But when I first learned about Bitcoin, which was back in 2017, so I was pretty late to the game.
Yeah.
Bitcoin was
started around 09, something like that.
Yeah, around 09. When I first bought it, around when I first heard about it, it was 5,000 per Bitcoin. That's when I first bought it. But I thought, wow, this is like one of the best risk assets I've ever seen, because I was used to investing in stocks, microcap stocks, which tended to have a limited audience. So, you'd find a small cap stock, it'd have a few retail investors that were interested in it, but Bitcoin had this global obsession, even at that time at 5,000. And so I thought, if this could really take off, the momentum and the buying power globally would just take this thing super higher. So for me, I always knew I could lose all my money or I could make a lot of money, but I was used to that. I was comfortable with that level of risk.
Right, because you've got that 20%. Elon Musk, of course, the guy that runs Tesla, invented Tesla, he just sold some Bitcoin, and he actually made more money off the sale of Bitcoin than he makes off the sale of Teslas.
Yeah, he just sold some in the quarter because he wanted to show the market that he could actually monetize some profits off the Bitcoin. So he's held most of it on the balance sheet. He hasn't sold it. They call it hodling. Hold on for dear life is the term with Bitcoin. Yeah. Instead of holding, it's hodling, which is actually an accident. It's from, I'm not sure if it's from the original Bitcoin white paper or something soon after that, but they misspelled the word hold. And then this, again, cultural phenomenon term took off called hodl. But yeah, Elon Musk is an innovator. He wants to colonize Mars. He thinks cryptocurrency is going to be the the, exchange, the currency, reserve up there. And we're moving to all digital world. Like, if you take a step back, most people have never actually held 100% of their money in their hands, right? So we've already been living in a digital world. Most of your money just sits on the screen, a little blip. I mean, if you go down
you can't go to the bank and say, give me $1 million. They won't give it to you that day.
You can't even ask them for $10,000. They look at you like you're some sort of criminal or terrorist. Yeah. And it's like, okay, it's my money, So that's why there's a lot of appeal around Bitcoin, the ability to move quickly from one place to another around the globe.
I just have so many questions about this. So this mysterious group or individual whose identity has not yet been discovered decided that there would only be in the whole wide world forever 21 million Bitcoins. And that they were going to be, they use the word mining because they say it's like Bitcoin is digital gold, right? So you have to mine it. So they use that example. Who gets to say there's only $21 million in the world and we're just going to divide up that $20 million between people who are prepared to buy and sell and trade only in that? Like, it seems so completely arbitrary. And what's to stop anybody from saying tomorrow, let's have 42 million Bitcoins instead of 21?
Well, so my understanding of it is, so it's 21 million coins, so not $21 million.
Yeah, I know. I was making the.
Oh, okay. Yeah, the market value of cryptocurrencies today is about over $1 trillion.
Yeah.
And Bitcoin would be the majority of that, or a large chunk of it. It's built into the code essentially. So, on a very basic level, the way that Bitcoin works is you've got all these computers around the world, like you say, mining, solving these, instead of, digging for gold, they're solving these super complex equations. And the reward for solving those equations is the Bitcoin, is the coin. And so they're all competing. They're using a lot of energy, which is one of the knocks on Bitcoin, is that it's very, not environmentally friendly, yet. Right. But if you look at comparisons and see, how much the entire banking system and financial system uses in energy globally, you could make a comparison that it is also not environmentally friendly. But anyhow, the appeal around the 21 million coins, of course, especially this year, as we've had unprecedented quantitative easing because of COVID and because the Fed and governments needed to take action so that
Which just means that central bankers are printing money.
Yeah, they're printing. I posted a video on TikTok that went super viral yesterday, 300,000 views, about how the US government has printed more in the last 10 months than 35% of the money in circulation has been printed in the last 10 months. It's massive. And so the idea that this is unchecked and unfeathered is scary for people, because that could mean inflation. It could mean you and I going to the store and things that we buy at the store become very expensive. And at the same time, our incomes aren't going up. And so this is problematic. When Bitcoin comes in the picture, it's like there's only going to be 21 million printed. And so it can't be debased. It can't be devalued the same way that central banks can devalue the US dollar or whatever currency.
By printing more of it.
By printing more of it, correct.
So there's this 21, this number, 21 million Bitcoins. But from everything I've read, people also say it's quite possible, like, because you're almost out of it. 18.5 million Bitcoins have already been mined. So like there's a finite. So who's to say that Team Nakamoto isn't just going to say, okay, we're doubling it. And then your value of holding this is cut in half.
Well, so Bitcoin would have to be the way that other cryptocurrencies, I'm not going to use the word print, but basically issue more coins, is that they don't have a cap, or they fork the blockchain, meaning it's split. So similar to how like a stock will split. Like, for example, Amazon stock is going to split soon because it's too expensive to just buy one share. So they're going to issue more. So Look, I haven't read too much into this and how it could be possible. From what I've read, it's baked into the code that there can't be more than 21 million for Bitcoin specifically. But underneath Bitcoin, there's a whole host of other cryptocurrencies. Like Bitcoin Cash is one that was actually forked off of Bitcoin, I believe a few years ago. And that one was meant to become like a faster version of Bitcoin, faster transaction, speed, time, better use for consumers and merchants and all that stuff.
So
but
go ahead.
But it didn't affect Bitcoin itself. It was just its own fork.
So what do you think when you see, JP Morgan, Jamie Dimon, all these guys who have for years been saying this stuff is just a hoax? It's like something that drug dealers and traffickers are dreaming up and you should stay all away from it. Now embracing it wholehearted and saying they're going to help their clients invest in Bitcoin. So now they're kind of muscling in on this new world.
Yeah, I have a great quote that I actually shared in front of 500 people on Bay Street 2 years ago when I hosted a blockchain event. And it's by a philosopher named Arthur Schopenhauer. And he says that, all truths pass through three phases. First, they're ridiculed, then they're violently opposed, and then accepted as self-evident. And I think that's the same thing for any major theme like this. They all made fun of it. They did try and oppose it. There's some opposition still happening. Certain countries like India are banning it. There's always rumors that China, where a lot of the mining happens, could shut it down. Right. But now, greed always catches up with Wall Street and they see they can make money and they're going to get in front of that train. And so they're happy being hypocrites if they can make billions of dollars on the back of it, in my opinion.
Okay. So when you go and purchase Bitcoin, like, is it different if you're buying it with Canadian dollars or US dollars or euros, or how does that work?
Meaning, is it different? Like you have to do there's an exchange rate, just like any other exchange rate. And so $1 US buys you X Bitcoin. And so you get a certain amount of coins, right? So one Bitcoin right now, last time I checked, is 54,000 USD. I think the high was 61 or 62 perhaps, just a couple weeks back. So just like any other currency, you buy it there. The thing with Bitcoin right now is it's still difficult to buy it. You need to get a wallet. So Coinbase is one of the largest exchanges in the world. I think it's the third largest exchange. It just went public 2 weeks ago. And like you mentioned, market cap is massive. And so you have to get a wallet and you have to buy your Bitcoin there. And then you have to leave it in this wallet. And there's been a lot of exchanges that have been hacked. People's money has been lost, or sometimes people forget their codes to get into. I was
going to ask about that. The whole world was paying attention a couple of months ago when this guy forgot his password and lost his Bitcoin.
Yeah, he had like one more attempt or two more attempts, and then it went quiet. So I didn't really keep up with that story. I'm presuming he did not get in, and it was worth 250 million or 300 million or something like this.
I know.
So that's still a problem. And from a custodial aspect, so the safety of your coins, this is a big consideration for big institutions. And so a lot of the big institutions, they actually just buy like ETFs, exchange traded funds that hold Bitcoin, or kind of like the equivalent to a mutual funds called closed-end funds for Bitcoin. And so because they're all scared, like they want to make sure.
So some of the risk, but some of the protection.
Correct. Yeah.
Okay, I could spend about 100 hours on this, but I just think instead I'll invite you back at another time and we'll carry on. But I want to ask you about some other stuff. Like when you watch the budget that we saw, the first one in 2 years, and again, evidence of quantitative easing and just printing money, no worries. Everybody says, oh, well, the interest rates are low. And so there's no consequence. Of course, there's a consequence. We are accumulating debt now over $1 trillion. The US is at 28 or whatever that number is, $1 trillion. How do you look at that budget? Does it seem important to you as a person with a very different perspective on the market, on investing, on money, on the future, than I might look at it?
Yeah, I mean, I always start with a top-down view of the world. And yes, it's very alarming how much debt has been printed. And like I mentioned before, the impact that, it's starting to have on certain asset classes. So for example, obviously the stock market since last March is up, I don't know, 70, 80%, maybe 90% since the crash. So, you're getting like stock market inflation, like equity price inflation. You've started to get pretty big housing inflation, not only in Canada, but in the US. And then you're starting to see it in some commodity prices. So lumber in the last few weeks, there's been some supply constraints, which, it's the Suez Canal incident that we had a few weeks back as well, didn't help, where 10% of the world's trade was blocked. But yeah, no, I think for me, the way that I look at, debts and governments is, you look at China and the US and you go, okay, China's eventually going to, in my opinion, is going to be the leading country. And the US has to just compete. And so the only way that they can really keep their economy going is to continue to print and to continue to keep it afloat. If the whole kind of world sort of inflates together, then is it really inflating if everybody's printing money, right? We're all doing it together. It's a very relative game. So yeah, the way I look at it, it's kind of a game of inches. You just have to, not to reference Wayne Gretzky, but like skate to where the puck is going. And right now, I'm really looking at these commodity prices very closely.
Because inflation, I mean, even the governor of the bank this week said, it's going up. Like, we are seeing it move. And I guess the other big question is who owns the debt? I mean, you start to lose control. And as you've already referenced, and I tend to agree that China's on the move, it's going to become the big superpower. So if they end up owning everybody's debt, if they own American debt or China, which they do, and Canadian debt, which they do, then we're losing control on 2 or 3 fronts at once.
Yeah. At this point, I wrote a newsletter a couple months back about the debt and how it's held, and it was the Americans hold most of their own debt. So whether it's at the municipal, state level, pension fund level, institutional level. So yes, the Chinese do hold some, and the Japanese and other countries, but it's not to the point where it's like really scary yet. And because they printed all this money in the last 10 months, it actually decreased the amount that's held by foreign countries. So that was actually kind of a plus. But I agree with you, longer term, we keep kicking this can down the road. It's like, who's going to buy our debt? Who's actually, now that rates are going negative. I mean, I saw today a pretty cool announcement where a European bank was offering bonds on the blockchain issued by Goldman Sachs and a number of other banks, which I thought was like, okay, if you're going to entice new buyers to buy debt and bonds, do it on the blockchain, you might get some millennials interested. But there's a lot of joking around on Twitter that, bonds are for boomers and millennials have no appetite for it, which is a bit of a problem longer term. Well,
because you have to believe that your government and your country is solvent, and there's a lot of evidence to the contrary.
Exactly. Yeah. And it's also a big consideration for retirees too, right? Yeah. Because most of their wealth is held in bond portfolios. And if their purchasing power is being eaten away, just sitting there in these bonds, they're trying to live a life off of those portfolios. Yeah. It's not great.
So I just looked at your last newsletter. It comes out on Sunday night, which is also an interesting decision. You put it out sort of around 8:00 on Sunday, and then everybody's got it in their mailbox first thing Monday morning, except a bunch of people read it Sunday night.
Yeah, I actually think that time slot is amazing because if you think about it, most people have families. In my readership group, some are younger, like the Reddit millennial crowd that you talked about, but they have had dinner with their kids and their families and their spouse, and they're probably sitting on the couch watching TV, and they're probably on their phone, and here comes the letter. And I've just always found that it's a great time slot.
Yeah. So people want to get their head around the next week and what they got to think about, and it's some quiet time after the kids have gone to bed.
Exactly.
Yeah. Okay. So this newsletter, this most recent one, you were talking about video games replacing Hollywood, esports replacing sports. Like, the Super Bowl is still the only big event. Everything else under that in the next 2 or 3 rungs are an esport, meaning people are sitting in front of their computers playing a sport.
They're playing a sport, but it's like, if you've heard of like Fortnite.
Yes, all the games. Yeah.
All the games. And it's esports is really, people watching other people play games. So no different than professional NHL or football. And so you've got these celebrities, these very talented people, or they can just be very interesting characters, because some of the most popular esport celebrities are actually not the best ones. They're just the most entertaining ones, because when you're watching them play, you're watching them on the internet for hours and hours and hours, and they're like eating, they're like drinking, they're like swearing, or they're like, they're being themselves. And it's a show. It's like entertainment value.
The Instagram culture, where you take a shot of everything you're doing all day long, incessantly.
Right. Exactly. But it's, I make a reference in that newsletter about this third place, right? So Howard Schultz, who's the founder of Starbucks, always talked about how he wanted to make Starbucks the third place outside of work and outside of the office. But now, and this started happening before COVID, but now like our home and our office is like the same place. So we're looking for an escape, and the internet's just exploded. Anything on the internet, whether it's, sports betting, esports, gaming, whatever, Netflix, whatever, it's just exploded. And so that third place is becoming an ecosystem called the metaverse, which is like a gaming. It's like the fusion of gaming and music and festivals and social media and community all in one online. We have this.
You wrote about this, that musicians, like real musicians, are actually holding concerts inside these video games, like inside Fortnite. So while you're busy running around doing this, all of a sudden there's a concert popping up from your favorite country star or whatever.
Exactly. And it's like in real time. And I'm not sure about the exact revenue model, but I'm sure you've got to pay to watch. And then I'm sure they're selling merchandise, and I'm sure they're selling special, gear for your avatars in these games, your skins and all that stuff. So there's tons of upselling that goes on. And you can imagine like the advertisers are just drooling over this, because the Gen Z and Millennial generation, they're not watching TV, they're not reading newspapers, and they're not listening to the radio. So these brands
She's got this little beep going, folks, because she's supposed to be doing a workout thing, but we're delaying her from doing that. So just hit the beep. Okay.
Hit the beep. Yeah, these brands are desperate, whether you're Red Bull or Nike, you're trying to reach that young generation, and you can't do it via the traditional methods. So you want to go where these gamers are, where these social media communities are. This is eyeballs galore for you.
It's amazing. And I think you point this out, that the younger demographic, most of them have never seen a television commercial.
Yeah.
They don't know what that is. I guess maybe in the Super Bowl, if they care about that, they might see one that has really good production values, but they don't. It's a generation. I mean, I'm sitting here with my 19-year-old niece. She does not watch television.
No, we buy things off Instagram. We have our favorite influencers wearing a shirt. We can click on the picture. It sends us to the page. We buy it. You know? So it's becoming, commerce is becoming a living and breathing thing. There's really cool technology out in Asia that's really taken off with it's sort of like a 24/7 version of the shopping network, but it's like live with celebrities and influencers all day long. And then you've got this like social media feed of people jumping in. And if people start buying the same product at the same time, they have the technology so that you can actually lower the price you pay for an item based on how many people actually bought that item in real time. So it's like gamifying shopping. There's like so many elements.
Okay, just back before, I want your definition of moonshot investing.
Moonshot investing is finding a theme, whether it's esports, whether it's Bitcoin, whether it's fintech, like a special sleeve within fintech. It's some theme that you think has multiple like upside to its downside. So, for every dollar of risk I'm going to put on the table, I think I could probably make, 2, 3, 5, 10, 20. Usually the moonshot ones are the ones that are 10, 20 times. And so the idea there is to invest in moonshots, kind of like lottery tickets, right?
Right.
And that's moonshot investing, just knowing that you could lose all that money. So you only do it in a small percentage of your portfolio, but it's worth it because the upside's massive.
It is quite literally what Elon Musk does, but everybody does it, right? I mean, that is about going to the moon, but it's just taking that really high risk venture.
Yeah. And I say that, I wrote on Twitter the other day, I say the risk is not taking risks. And I really truly believe that, whether it's in your portfolio, again, in a very controlled fashion. And I wrote a whole entire newsletter about how I construct my portfolio. It's online on my Substack, but but not taking risks, is like holding bonds, and bonds are actually risky right now.
And not taking risk is like never doing anything in your life that you didn't think you could do before too. I mean, it applies to life.
Exactly. Right. It's we only live once, none of us are getting out of this alive, not to be a doomsday, but why not have some fun while we're here?
So what are you thinking about now? Like we've obviously been talking about, life in COVID and how it's changed, and, Peloton is a big thing, and home renos are a big thing. Home Depot's doing really, really well. What do you think is going to change really and stay changed? Work at home, live at work, however you describe that. That seems like it's going to be a present. It's going to continue being reality. What are some things like that you're thinking about?
Yeah, just from a very basic level, I don't really picture the world going back to let's put on a suit or, our professional outfit every morning,
right?
Getting ready for 45 minutes to an hour, then commuting for another, 45 minutes to an hour, and then getting to work. And so we've wasted basically 2 to 3 hours of our strongest brain power just getting dressed and getting to work. Like, I think that's just now that we've realized we can do without that, it's a very archaic concept to waste all that time doing those things just to get to the job you could have just done from jumping out of bed and hopping on a Zoom. So
I think you were saying the other day that you like 10 a.m. is kind of your peak, in an individual's peak time. You're awake. It's, earlier in the day, as opposed to 7 at night when you get home after commuting and putting in a full day's work.
Exactly. It's when you're most alert, your brain's functioning the best. So you should be at work you should be doing your best work at that time, and not being tired from like navigating to work. Or also, just getting dressed up to look a certain way, putting on the armor, if you will. Right. So I think a certain percentage of that we're not going back to that. I also think environmentally, there's been a lot, Larry Fink, who's the CEO of BlackRock, which is the biggest asset manager in the world. He said, we can't, from an environmental standpoint, all go back to work and cause this much damage to the environment when we know we don't need to. It's just silly.
But it's a moral question almost.
Yeah, it's definitely a moral question, but I don't think we could have gotten there without being within COVID for over a year, right? We wouldn't have seen that. So I think there's some percentage, we're not going back to the office, but I do think some people will go back to the office. Clearly, companies are using this as an opportunity to close down expensive offices in downtown cores. So, banks, this is a big percentage of their overhead is like these expensive bank branches. So I think that's going to get downsized. And I think people like this idea of living kind of wherever they want and having this extra time to decide if they want to work from a remote location down in South America,
Yeah. But that leads me to a question about housing, because you've written about this, you've talked about this, that the home needs to be a different thing because we are going to be there a lot more. And it's one thing if you're by yourself or on your own, you can kind of construct that. But if you're trying to put that in a family context, we've seen people move from places like California that are crowded to, Texas, where there's more space. We've seen people in big cities in Canada move to the commuter towns are even further outside of Toronto or Vancouver or whatever it may be, because they can't afford to live in the big cities, and they can have more space and a backyard if they go to some smaller town.
Yeah, I mean, I think it's fantastic because, to your point about affordability, right now, if you're a coder in San Francisco and you can barely afford, 200 square foot apartment,
Right.
You can move to South America and do your job and, pay a fraction of what you did. So it brings in the question of like the affordability and then the quality of life. Do you want to move out to, maybe a smaller town where you can have a big backyard and living and breathing and, a healthier way of life. So I think people have started reorganizing themselves. I mean, we've seen it here in Ontario, whether it's Prince Edward County or Niagara or the Muskokas, just mass migration out of Toronto.
Or you could all come to Saskatchewan, where there is really a lot of room and not a whole lot of people.
Yeah, not a lot of crime, right? It's the same community.
True. No, but I think these are there other things you're looking at right now that you think are going to be a result of this in terms of what you want to invest in, or ideas that you think you will see succeed in the next little while because of all these changes we're going through? I don't know. It might even be on healthcare or something.
Yeah, I mean, telehealth has been a huge theme this year. I mean, the government, especially here in Ontario, had to move quickly on allowing the compensation of, telehealth visits through COVID, and then it's stuck in law. So that was a huge opening of that whole theme for Canada. I'm also looking at, there's some technology that I've written about in some of my newsletters where it sort of recreates a workplace environment, but digitally. So you can imagine it shows the layout of a real office. You have your little avatar, and you can actually have conversations with your coworkers, like at the water cooler, like you can move around the office virtually. So I don't know. I think back to what we were talking about earlier, this metaverse and this third place. I think 10 years from now, we're all going to have a certain percentage of our life living. I don't know if we're going to be wearing the 3D, the 3D
virtual glasses.
Yeah, the virtual glasses, or the technology is going to get even better than that. But we're going to be online living in these other worlds. Is what I really think.
Because we are also, and I think this is a product of being a little bit older, but I think it also applies to the young generation, which is we need less stuff, but we want better experiences.
Yeah, and we want connection. That's the other thing. So we're super connected, but we feel disconnected. There's a real whole theme around stress and anxiety and feeling lonely. But with the technologies all there, it's just a matter of how can we transfer it to feel more like a real human experience, right? As opposed to just a 2D one like we're having on Zoom. Like, could we not be sitting in a living room? Even I take it to online dating. I think online dating has an insane amount of change ahead of it, because this idea of just like flipping on someone's photo and then, maybe meeting them on a Zoom. It's like, why can't we go bowling virtually? Or why can't we, I wouldn't pick bowling. I don't know why I said that, but like,
then you can see what their sense of humor is or how they operate socially.
Yeah. Like you need to feel someone's kind of texture and energy, right? Like to decide if you want to spend more time with them. So I think there's a whole, you could go to Burning Man with your date, this festival in the desert. They have a digital version of Burning Man now. So
no, it's just crazy. Before we wrap up, I'm just going to put Paul on the spot here, because Paul Boone's our producer here, and he is a millennial, right, Paul?
Hi. Yeah. Yes, I am.
So I bet you, I bet you have a couple of questions for Genevieve. Is there anything that she has said that you've heard that goes, yeah, that's my world, that's my life?
Well, I thought it was really interesting. A lot of it was really interesting. I just wonder what your thoughts are on the future of retail investing, because, Senator Wallin didn't mention it, but the GameStop craze is a major story in the last year.
I'm so glad you brought it up. Go.
So I was just wondering what you think the implications of GameStop craze have been.
Yeah, I think it's been amazing. Because first and foremost, it's captivated the imagination of the young generation to want to be invested in the stock market. And if you understand compounding, so the art of compounding your money over time, that means investing it and making a return over time. Warren Buffett will tell you the best time to invest is basically the day you were born, and the second best time is now. So the earlier you can invest, the better. Now, the flip side of that is there's a lot of sort of myth around this get rich quick stuff. And a lot of these young investors have come into the market when we've had an insane bull market. So they go around saying things like stocks, well, they call them stonks, only go up because this is what they truly believe that
that's their only experience.
That's their only experience. Yeah. Right. And so,
that's right.
And the thing is, if you look at the S&P 500, it has really only gone up over time, over long periods of time. Right. But the idea here is to teach them about these sell-offs, these bear markets and these bull markets, and to understand that you've got to stay in through these drawdowns, because otherwise, there's long-term studies where if you've been out of the market for the 10 best days of the last 50 years, I'm going to get the numbers wrong here, but basically you lose out on 50% of your return, right? And so I think there's I hate to use the word educational component because you can go broke educating the world, but there really needs to be some insights and leadership. And I kind of see myself in that role because I'm young enough to relate to this generation. But I also have the experience of managing money professionally for 10 years. And so I've been through, when I first started, I was just like them. I thought, yeah, I can get rich quick. I can beat the market. And then I quickly realized no. And I was very lucky to be able to invest money at a very young age and make a lot of mistakes and learn from those mistakes. And they're all going to have to go through that too. I just don't want them to lose all of their money before they can, or not just lose all their money, but also lose their interest in the market because they'll think it's too hard, because it does get quite boring. When the market goes sideways, it's even worse than when it sells off because there's nothing going on.
Yeah,
absolutely. So you mentioned educating, and I noticed in your newsletters, a component of that sort of, I guess you can call it education, there's a little bit of entertainment, but you use memes a lot. And that kind of is a little bit of the cultural currency of the internet. Do you think that more financial advisors are going to start to integrate things like memes? Because frankly, I don't see anyone else really doing it right now.
Yeah,
she's ahead of her time. Yeah,
I think memes are a multi-billion-dollar industry. I think I'm actually fascinated by comedy. So not just as it relates to finance, but the actual art of comedy. You have to be very intelligent to put together. Because in every joke, there's insight. There has to be a nugget of truth.
There's always truth. Yeah, for sure.
And so the idea, and there's a release mechanism to comedy, right? It allows you to let go. And especially in finance, it's it's a serious topic. But if you can make people laugh at the same time, they're way more likely to learn and keep learning. And so for me, my background is in psychology. And so I always look at it through the lens of, if I'm on the other side and I'm reading this material, if I'm the audience, how would I want this presented? How would I want to engage with the material. I want to feel like I can have a good time while I learn. I don't want to fall asleep. And so I always thought there was something missing there in the marketplace. And selfishly, I designed the newsletter to be something I would want to read. And I just made a bet that there were other people like myself out there. And it turns out that there are. And
it turns out there's 150,000 of them already. They're already looking. Genevieve, it's just so good to talk to you and see this whole idea of yours come to reality. We've been talking about it through the process, you and I, because we're friends. And it's just great to see it. And it's only the beginning, right? And there's a YouTube channel and there's all this stuff. So the best way for them to access is go on Substack and to the Grit Capital newsletter.
Yeah. And they can also find me on Instagram at Grit Capital, if that's easier for them. And then there's a link to my Substack on Instagram.
Yeah. So it's great stuff. Thank you so much.
Yeah, it's been a pleasure.
And good luck. We'll just keep talking about this. It's wonderful. Genevieve Roch-Decter, the brains of Grit Capital, and Paul, thanks very much for those questions, because I had GameStop on my list, but we just couldn't get there. So that's
We got there.
We got there. Thanks, everybody. That is it for No Nonsense with Pamela Wallin this time. See you soon.